All right, good morning, good morning, everybody. Oh, looks like we don't have, do we have sound? Hello, do we have sound? Do we have sound? Let me know. I don't see it coming up. Let's see. Okay. Um, okay, you can hear me. Okay, awesome. I don't know why the sound isn't coming up down there. Also, let me hit the lights, people. Do. Boom. Now we're in business. Yes. I don't know what's good with YouTube. It like shows my volume meter down here in the bottom left, and it shows nothing. So I don't know if you guys can hear me. I just know because Vivian and Andrea responded. And then I look on my microphone, adapter, and that says that it can hear me. So I got no idea. YouTube, right? YouTube bugging out, Google, whatever the powers that be. But I'm excited to be here for another week. We can hear you loud and clear. Awesome, awesome. So yeah, I guess it's just sometimes YouTube does its own thing. But I'm excited to be here, y'all. We back for another week. Back to kill it in markets. Last week was amazing, right? Nothing short of amazing. Absolutely baller plays on every single level, right? SPY, Apple, Microsoft, Nvidia, right? AMD. We had so many different stocks that we hit on, in a number of different stocks across different sectors, right? We had some beautiful swings that we entered, some beautiful swings that were called out. And overall, it's just looking like a great, not only was it a great last week, but a great time moving forward, right? Just a beautiful time to be here, to be executing in markets. I could not imagine, again, not executing in markets right now. Just with all the tremendous opportunity, I could not imagine having $40, $100, $200, $1,000, $2,000 that I was not actively multiplying in markets, given the immense opportunity that's here each and every day, right? And that doesn't speak to, not being patient. You still want to be patient. You still want to wait for the opportunity. But once it comes, you being ready to execute is huge. And there are a ton of different opportunities to execute on. But welcome to the Deluxe Pre-Market Prep session here for June 5th, 2023. As we make our way through 2023, we're more than halfway through. Let's go, right? We're pushing, kind of pushing our boundaries, pushing our goals higher, achieving them, crossing things off the to-do list. But the Deluxe Pre-Market Prep, the reason why it's Deluxe is because we go over the landscape for the week ahead. Very important in order to be successful is to have a landscape, right? Have some reconnaissance, have some intel, right, from my military people. You don't just drop into battle and then just say, okay, let me go find out where the action is, right? You have to get intel, what's going on, right? Where are the landmines? Are they, planning any offensives? Is there anything happening that could throw off the game plan? All of that is important. It starts on Monday, right? So there is no roll out of bed and then, oh, let me see what the market has for me. If you are not aware of the landscape when you go into the week, you will have incorrect expectations. If you have incorrect expectations, you will have incorrect faith in certain aspects of the market, right? You'll place trades in an incorrect manner. So setting your expectations is everything. And that's what we do here on the Deluxe session. So good morning, everybody. Hope you had a nice, restful and restorative weekend. Some running around for me, but a great weekend. I mean, the weather was chef's kiss, immaculate. And I'm happy to kind of get back into things. I have to admit, I did wake up a little bit later this morning. I'm not going to lie. I was bad. I was up late finishing up a series on Netflix. It happens, right? But, woke up, got that, kind of surveying the market in. And sometimes it happens, right? Sometimes you're bad, right? Throw a 3 in the chat if sometimes you're just bad. You're like, hey, I should have gone to sleep earlier. I didn't. That was me last night, right? So this is me coming clean to you guys. It happens. It's okay. But it's just as long as you don't make a habit of it, right? You don't make a habit of it so it doesn't compound and negatively affect your performance, negatively affect the way that you're operating, right? We still operated at a high level last week, even with, some wrenches thrown into things, right? We're still able to absolutely crush last week. So I'm excited to keep it pushing, excited to set the bar, higher and to continue to achieve, right? Make sure, again, that you are withdrawing profits, paying yourself. For all of my people who think, oh, hey, I made 5,000. I'm just going to aim to make 10,000 next week. That is how you blow up your account. You don't pay yourself, you don't get paid, right? This is not like a normal job where you get a consistent payout and, no, if you don't pay yourself, you won't get paid. I'm telling you from experience, right? There are tons of people who, you can either you do a lot better when you listen to those that are experienced than you trying to just say, hey, I've garnered some experience and I'm going to use this for myself, because it is tough for you to scale when you're just starting out thinking, okay, I'm just going to go ahead and turn this 1,000 into 3, turn this 3,000 into 6, turn this 6,000 into 15. That does not happen very often, right? Typically what happens is you turn 1K into 3, 3K into 2, 2K into 25, and then 25 into 700, right? That's typically how it goes. So make sure that you know what that level is that you top out at and withdraw, right? And then after you do that, you could turn $1,000 to $3,000 for 3 months, and then you say, okay, now I'm going to trade with 3, and I'm going to try and take that 3 to 5 or 6, right? And that's how you scale up. But just please, that is like one of the biggest misconceptions that people have is they have a big week, and they're like, okay, I had a big week. Now it's time for me to do that again, right? But with this larger amount of money, 9 times out of 10, that does not happen successfully, right? So this is me from experience telling you to pay yourself. Otherwise, you'll find yourself 2, 3, 4, 5 years down the road. You're like, wow, I put all this money into the market. I've not paid myself once, right? So you want to make it a habit of doing that. But let's dive into what we have on the docket for the week ahead, as well as our Monday specific news. So in terms of the week ahead, investors head into this week with the debt ceiling crisis resolved for the near term, but will need to stay sharp with the May jobs report resetting expectations on what the game plan is for the Federal Reserve as the FOMC meeting on June 13th through 14th approaches. Let's see here. Seeking Alpha Investing Group leader Lawrence Fuller said that the headline jobs report number may look strong, but the details in the report actually show a significant softening. The week will start with some potential ripples in the energy market in the wake of the June 4th to 5th OPEC meeting. The calendar is light for major economic releases, which is nice for us, with updates on factory orders, consumer credit, and initial jobless claims likely to be the most notable data points. So that is nice, right? We don't have any like kind of crazy, super important economic reports this week. Let's check. What is today? June 5th. All right, 9:45. We get S&P U.S. Services PMI. That's something where it's like meh, right? Could impact movement, but not a whole lot, right? Typically, it could be a 1 minute, 2 minute spike. Um, Thursday, we get our initial jobless claims. That's really the biggest thing is Thursday, initial jobless claims at 8:30 a.m. So that's nice. We've got a relatively free and open schedule when it comes to market movement this week. So we don't have to worry about news, throwing wrenches in things. It's really just Thursday morning, right? Remember, anything you swing on Wednesday will be subject to what we have going on Thursday in terms of the initial jobless claims. Now let's see what we have going on in terms of earnings. Not really in two notable names. JM Smucker on Tuesday, June 6th. Their ticker is SJM. GameStop on Wednesday. So, GME, we know, right? The meme stock extraordinaire GameStop reports on Wednesday. We do have Campbell Soup, CPB is their ticker. Wednesday, June 7th. We got DocuSign, ticker DOCU. Vail Resorts, ticker MTN. We do have NIO, right? Reporting Friday, June 9th. That's your Chinese EV company, right? Was a real darling for a while, NIO. So we'll see if it can, wow on earnings or do anything. I haven't checked on it in a bit, so let's see what they got going on. It's like big selling on NIO. Again, I have not involved myself really with any Chinese stocks as of recent. No real reason to. Too many nice blue chip American stocks that have been crushing it for me to want to risk anything in Chinese stocks. I do know on the weekly they put in a nice, kind of hammer reversal type candle, so they can push higher, but also earnings can literally do anything. So that's pretty much how it goes. But overall, NIO in a very steep and significant downtrend. Literally since its peak high at like 67 way back in January of 2021. So NIO flew too close to the sun, right? Just like young Icarus, and now is trading down around $7.56 a share from 70. That ain't fun. Let's see. How many of you guys remember NIO? Throw a 5 in the chat if you remember NIO. We traded NIO a few times, right? More than a few times, but it's just been something where you you move off of stuff, right? You move off of stuff when it just does not, when it doesn't move, when it doesn't do it, when it's not optimal to trade that thing, right? People get really attached to names. You got to be agnostic when it comes to markets, right? Don't get attached to names. You just got to say, hey, this thing isn't moving how I need it to move. I'm done with it, right? But NIO was something that we would take trades on right back in the day. So it's crazy to see it now just absolutely get gobsmacked down to the bottom of the barrel, but it happens. Most definitely happens. Now, in terms of top news here, iReality, we're diving into our Monday specific news. Apple is slated to host its worldwide developers conference this week, and all expectations are that the tech giant will finally take the wraps off its long-awaited mixed reality headset. The device, which has caused some recent press reports to question Apple's strategy, is likely to be the tech giant's first major product expansion in years, following the 2015 unveiling of the Apple Watch. While the Cupertino, California-based company is likely well prepared to bring the device to market, additional time may be given to developers to build apps and features for it. Now, in terms of the leaks, the headset, which could cost as much as $3,000, is likely to be called Reality Pro or XR Pro, with a new operating system called XROS. It's expected to launch with both augmented reality and virtual reality technologies, with an option to switch models and have a lightweight design similar to ski goggles. The device also comes with an external battery that can be worn on a person's body, incorporates Apple's processors and Siri. Siri sucks. I don't know what they did to Siri. They messed her up years ago, and she has never gotten right since. It may even feature an external screen and several external cameras. So it looks like they're kind of moving away from kind of what Meta is doing in Oculus and that they might actually make it more kind of a holistic approach to mixed reality. Like they might have you place, depending on what you have going on, right? They've got external battery packs, they've got possibly external screens, they've got several external cameras. So it might not just be virtual reality setting. It might be some mixed reality where they incorporate the room that you're in, into what you're doing. So, it'll be exciting to see. And I'm pretty sure we'll see it all over our timeline. So I don't think you guys will have to go too far in order to see exactly what they have going on with these headsets. In terms of WWDC, right, which is the Worldwide Developers Conference, for Apple, a lot of times when Apple unveils new stuff, it does not cause the stock to run, right? If anything, sometimes the stock is either flat or it sells a bit. That's just my history with Apple, my experience with Apple. That nugget is huge, right? Because again, everybody thinks, oh, Apple's unveiling this, it's going to run. It could, right? It could, but do not think that it is more likely that it runs than not, because typically, as it has in the past, right, Apple will run up until an announcement, and then at the announcement, it'll chop or it'll drop a bit. So throw a 2 in the chat if you understand that. That is very important, right? Expectations, setting expectations is everything. Now let's see. Energy. I like that, right? We talked about energy last week, called out some plays for energy last week. So I'm, kind of keeping my ears to the streets here about energy news. OPEC plus takeaways, previously warning speculators to watch out. Saudi Arabia has gone through with additional voluntary cuts of 1 million barrels per day of crude oil starting in July. The move would come on top of the 500K barrels per day voluntary cut announced in April, reducing total Saudi production to 9 million barrels per day and marking its lowest output level since June 2021. WTI crude futures initially rose about 1% to $73 per barrel in the news, though the rest of the OPEC Plus group confirmed it would keep the official production targets unchanged for 2023 and limit combined oil output from January to December of 2024. The UAE will get to boost its production next year, coming at the expense of African members who are asked to give up part of their unused quotas. So overall, good news for energy, right? You've got energy pushing higher off of that pre-market, right, as we came into today. Oxy was called out last week, right? Oxy was one of the things that was called out last week. Looking good here pre-market. Oxy's got a nice daily cup and handle pattern with breakout at 60.35. That's exactly what we're, pushing over right now. So we're looking to open around 60.91, right? So if we break over that pre-market high at around 61, then Oxy can continue to push. If we sell and we come back down right? It could settle on top of that 60.35. You got to see how it interacts with that area. But overall, 60.35, a big level on Oxy. We already talked about it last week. The Facebook group broke the weekly downtrend, called out some nice long plays on Oxy, and Oxy looking solid on the daily. If you can close above 60.35 by end of day, beautiful swings on Oxy, and you can take advantage of oil, which often has multi-day moves when it starts going, right? So again, literally free money here being printed during this session. Let's see what else we got going on. Financials. System resilience. Large U.S. lenders like Morgan Stanley, ticker MS, may soon face revised capital rules following the collapse of smaller regional players earlier this year. Overall capital requirements could be raised by about 20% at institutions with at least $100 billion in assets, compared to the current $250 billion threshold that regulators currently reserve for their toughest rules. Credit card giants that are heavily dependent on fee income could also be impacted, as well as those involved in investment banking and wealth management. Michael Barr, the Fed's vice chair of supervision, previously hinted at tougher rules in a congressional hearing last month, while the central bank has also admitted that its supervisors didn't fully appreciate the extent of the vulnerabilities. So this is pretty much everybody throwing their hands up saying, hey, we all kind of contributed to this. We need to tighten the reins a little bit. But I don't think this is going to really affect these large lenders like Morgan Stanley or Goldman Sachs, because at the end of the day, they're the big guys for a reason. They're not the ones going out doing the stupid stuff like Silicon Valley Bank was doing, and First Republic Bank, and all these regional banks that are now, sitting at the bottom of the ocean. They're the big guys for a reason. They have tons of cash reserves. So this is kind of really a no factor for me. As I hear this news. In terms of economic news, part two, while the debt ceiling drama could have put the U.S. in default, is now in the rearview mirror. The aftermath could still spell trouble. The Treasury's next move will be to refill the Treasury General Account, or TGA, at the New York Fed, which could lead to a potent liquidity squeeze. At the same time, the Fed's quantitative tightening, or QT, will go from having no impact so far this year to a big bite. Taken together, the replenishing process could profoundly impact stocks, the economy, and even GDP. So that is important, right? Because this is something where the aftermath of the debt ceiling, when we talk about the Treasury trying to refill the Treasury General Account, this could lead to market sell-offs, right? Because basically what happens is you could have a potent liquidity squeeze. So they take liquidity out of the market, right? They take money out of the market. They take things out of the market because right now the Treasury needs to refill its account. At this point, you had big tech companies that had significantly more money than the Treasury did last week, right? Like Apple, all of them had more money than literally the government's Treasury did. So now they have to replenish that. And there's a lot of different ways you can go about explaining it. All of them are pretty tough to understand unless you got a graduate degree in economics. But overall, it's just the fact in which knowing that, hey, the debt ceiling issue has been resolved. I talked to you guys for the past 2 weeks about how typically when the debt ceiling issue is resolved, markets don't necessarily run right when it's finally resolved. Sometimes they sell. This is exactly why, right? Because you have the Treasury having to refill the Treasury General Account. And then from there, they're like, all right, guys, just because the debt ceiling was passed doesn't mean everything is okay. And what happens is you get that liquidity squeeze, money comes out of the market, right? In order to fund the Treasury, and that can cause markets to sell. So that's an important thing to just be aware of, right? Have in the back of your head. The market is in a nice pronounced uptrend. Things are looking good, but it's just important to, again, factor that into your expectations so that okay, if I see some selling, right, if I see the possibility for some selling, I recognize this could have merit instead of me just being like a monkey throwing poop at the wall, right, which is pretty much everybody who trades during a bull market. Like, hey, I'm so smart, I'm going to throw money at the wall and it's going to come back and make me more money. But if you aren't aware of the little things that cause the higher lows in that bull market, you can get screwed, right? So you want to make sure that you're not just throwing crap at the wall, but that you are moving, at the right time. Like last week, right? Called that dip buy at the perfect time, Wednesday, right? Same thing on Thursday, right? We came out, we were red a little bit, said, hey, SPY, stop playing around, rocket. What did SPY do? Stop messing around, and it rocketed. Buying at the right time is huge. It's very, very important, especially with options, because, they expire. And if you don't buy at the right time, that can completely ruin your trade. Now, in terms of today's markets, in Asia, Japan, we're up 2.2%. Hong Kong, we're up 0.8. China, we're up 0.1. India, up 0.4. The footy in London up 0.5%, Paris down 0.1%, Frankfurt is flat. The Dow is up 0.1%, S&P is flat, NASDAQ down 0.3%. Crude oil up 1.6%, gold down 0.5%, Bitcoin down 1.6% to 26,790. We have PMI composite final at 945. That's like the one thing that could maybe move things. ISM service index at 10. But again, these wouldn't be like big moves one way or the other. Typically, when you have data like this that comes out, it's the move that was already going to happen. And then they use the data as cover. So, they have a move that is likely and they use the data as cover. A lot of times they'll fake you out, and whatever move you get in the direction of the data, right? When the data comes out, let's say spot pops for a quick second, typically you end up selling. Same thing. If we sell for a quick second, typically you end up rallying. So that's just what I've noticed with these, kind of minor bits of data is that they use it as cover. They'll chop beforehand. They get everybody saying, oh, what are we going to do? What are we going to do? And then we finally get direction after we fade that initial move. So what else is happening? We'll wrap up here with a rapid fire bullet point rundown. Fitch keeps U.S. on rating watch negative despite debt ceiling deal. Energy industry says the bill doesn't include enough permitting. I guess that's for the debt ceiling. Disney taking $1.5 billion charge tied to pulling streaming content. Restaurant chain Cava set to start IPO roadshow this week. Wow, Cava going public. I love Cava. So, congrats to them. I'm annoyed. I went to University of Maryland, as you can see here, on this crew neck, and they put a Cava in like the year after I graduated. You guys know how that goes. Just completely unfair, right? I feel cheated. I did love the food options I had there, but man, I would have loved some Cava. NVO and LLY. LLY is Eli Lilly, right? One of the strongest pharmaceutical companies of our lifetime, facing increased competition in obesity drug market. And the mixed jobs report doesn't make Fed decision any easier. So the Fed's got to decide, right, for June what they're going to do with interest rates. A lot of people think they're going to take their first pause. But with the jobs numbers coming in how they did, it just kind of muddies the water even more. So we'll just remain ready for that whenever that comes and focus on what's in front of us, right? Real estate investors buy 49% year over year fewer homes in Q1, according to Redfin. YouTube, ticker Google, right? Google owns YouTube for anybody who didn't know, to allow claims of fraud about past elections. Sony CEO downplays cloud gaming risk on console market. And then Walmart talks AI and international growth at annual meeting. I feel like you have to at this point. If you're not talking AI at your annual meeting or investor meeting or any type of meeting, you're really falling behind, right? And your stock probably won't do well as a result. But that's pretty much everything we got going on for June 5th, 2023. Thank you all for taking the time to invest in yourselves, right? You got 1% better. That's the investment that's always going to pay. You make money pre-market and post-market in your analysis, in your ability to game plan and then get ready to execute, right? You actually making the money formally is just that, a formality. So this is the time where the battle is won. Make sure that you're tuned into this because that is always going to pay. As always, if you got any value from this, just show love to the account. The Instagram reels that get posted every day, right? Comment on those, show them love. I see that. I appreciate that. Each and every person that's taking the time, right? You guys are the best, your family, and families looking to continue to build together, to grow together. We had an amazing week last week. There's no other way to slice it, right? Literally over 10 different stock tickers that we played, a number of different ones paid from all different walks of life, all different numbers of buying power, right? This week is a new week. Come in with a renewed mindset. The market does not owe you anything. We're not hot stuff, right? You got to remember that. As soon when you have a great big week, you come back down to earth. I'm not hot stuff. I'm a student of the market. I'm resetting, right? And I'm still just as hungry, but also still just as patient, right? That is very, very important to know. The market doesn't owe you anything. If you had 1K, you made 3K from it last week, do not expect to make 6 from it this week, right? That's unrealistic expectations. Reset, back to zero, back to ground level. The market owes us nothing. We're not Warren Buffett. We're students, right? Students willing to be patient, willing to execute. You operate like that, I guarantee you'll win more often than you lose, and you'll win bigger than whenever you do have losses. So everybody have a great rest of your day. I'm going to go make this Loom video for this pre-market analysis, and I'll see you back here tomorrow morning for our next pre-market prep session. Have a good one.